What's up, beautiful people? Today we're gonna talk about 401k and IRA, and we're gonna, just give you guys all the overview and what you can do. Okay, I have so many tabs open, so we'll just get through it. So it's an investment account offered by employers to help employees save for retirement, and there's a difference between 401k and IRA. Okay, this is the fastest way you can um, set up if you're in the USA. I don't know about other country. Always research your country, but in the USA, 401k, IRA, this is another vehicle that you can utilize. It's, there's a lot of benefits when it comes to growing your money tax free with this account. So that's the one of the best thing that a lot of the wealthy people also use the 401k and IRA, okay, to save money on taxes. So um, most of the employer have this. If some employer don't, so just talk to your HR if you are employed full time. So IRA, it's a individual retirement account or tax advantage investment account that individual investor can open to help save for retirement. Okay, so both IRA and 401k offer tax advantages for retirement savings, but details differ for contributions, so they're both, not the same. Okay, so withdrawals and taxes as well are both different. For the traditional 401k offer pre-tax contributions. I like the Roth 401k because it's after tax, so it's up to you guys. Whether for me, I just like doing the Roth 401k because I like there's all different. Okay, the Roth IRA and the Roth 401k, there's all different accounts. So for me, I like the idea of paying the taxes now, so later when I withdraw the money and whatever the tax, you know, and the gain for that Roth 401k, that's what I just have to pay. I don't have to pay more money for the taxes. I don't know the taxes as well, up and down every year. We don't know. So for me, I just want to pay the tax right away. So I like the Roth 401k. Um, so if you go to the irs.gov, um, you go, it's gonna tell you what is the limit. Okay, see, this is why I said every account is different. So for the 401k, you have 24,500 for 2026. So if you are watching this video and it's no longer 2026, IRS can change this. So always go refer back to the IRS website and see what the limit is. They can update this based on inflation, based on, taxes, laws, whatever. So IRA is 7,500. So you can have both if you want to do both. A lot of IRA, you might have it in your employee or employers, or you can go to banks. There's a bunch of platform now, investment accounts, Fidelities, Charles Schwab, all these places, they have IRA. So you can literally set it up right now and make a contribution, and you have 7,500 every year, yearly. And then of course it's more for 401k, so you can have both 401k and IRA, right? So just go through all this in the IRS website, and there's a difference between IRA. It will tell you all the information here: traditional IRA, Roth IRA, all this information. So always go to IRS for all that. And then for IRA and 401k, so this 401k is an employer sponsored sponsor retirement plan that let you save for retirement directly from your paycheck. So, and also for the match, I would definitely go according to empower.com. For Empower Research, 25% of workplace savers aren't contributing enough to maximize the employer match. For 401k, most of the employers do have like up to 60% of your paycheck, and they will contribute money. And sometimes, you have to stay there in order for you to maximize and withdraw all the money for the match. You have to stay in it depends on your employer. So talk to your HR, your management, most of the time, or their employer sponsored company, third party company that they have this 401k is held, like Fidelity. Sometimes some of them are Vanguard. So talk to them. They'll tell you if you have to wait 2 years, 3 years, I don't know how many years before you get all the match. before you leave the company and decided to withdraw the money or whatever you want to do with that account or roll over it. Okay. So I would definitely, most of the time I think it's 6%, depending, like I said, it depends on every employer. So I would definitely max it out if if your employer is giving you up to 6%, then I would definitely put in 6% to maximize that. So let's say your paycheck is 1,000, so 6% of that, and then whatever that, sometimes they put like 4%. So if you put in 6%, they will put in 4%. So that's free money, guys. So maximize all the time. If your employer is saying you have to put in 6%, we'll give you guys 4% every paycheck. So that's free money until the only thing caveat with that is you have to stay with the company for some of them. You have to stay for a year, couple years, depending on the plan. Okay, so always maximize your um match, because that's free money. Some of the companies don't even have match um when it comes to 401k, so always utilize free money if it's given to you, especially in your employer. So you talk about that. You can go to Fidelity as well, and it'll tell you that these are both tax advantage ways to save for retirement. And it's automatic. You can set this up in your paycheck from your employer automatically, so they will just set it aside. You don't have to do this manually. You can ask them to do this automatically. So when you go to your account, let's say if the company is held in Fidelity, you can just log in and you can see every paycheck every 2 weeks when they put your retire contribution here. Okay, so same thing with taking the money out. There's a lot of things that you can do with 401k. So go through all this information. I'm going to link all the link as well from these platforms. um so it's good to know all this information, what to expect. Okay, and then we go to, so it tells you right here too that you can roll over if you leave the company, you go to another company. You can roll over in one place, so you don't have multiple, 5 different accounts, 3 different accounts. You can always roll over your previous 401k, or yeah, 401k to another company or another platform. So just be aware of the fees if they have some fees. So same thing with withdrawal, like right here for withdrawal for IRA. It tells you right here what's the minimum distribution, age 73. Normal withdrawal, same thing with the Roth 401k is 59 and a half. So you don't have to pay for the fees, for the taxes. But if you do withdraw early, of course, you're going to accrue taxes and fees. Okay. So beware. That's the only caveat when it comes to these accounts. Of course, they're going to, charge you with the fees if you're not that age. Okay, and the taxes, of course, or the gain. So let's go through this real quick, what you can do for 401k. So you can do, let's see, actually there is a right here, all this information here I'm going to link. Okay, retirement topics, exceptions to the tax on early distribution. So in order for you to have that 10% taxes exception, this is all the information in your life that you can go through, and then you can get that exception tax. So if you're having a birth, adoption, death in the family, disability, domestic abuse victim, education, emergency, personal expense, emergency savings account, hardship, okay, home buyers, you can even use your account. If you're trying to pay for a house and you don't have enough money saved up, you can you can use all that. All right, so medical, if you have any medical issues, okay, roll over, separate from service, even in military as well, terminal illness. So all of these, always talk to your sponsored plan from your company. If they're using Fidelity, just talk to them. They will tell you everything, what qualifies for the distribution and the exception with that 10%. So exception, because they're gonna give you that 10% tax if you withdraw early. Okay, you can make loans too for your 401k. Definitely lower, supposedly lower rate from your sponsored plan. And most of the time, yeah, they are better than personal loans out there. Might as well you're putting you're loaning the money from your own 401k. All the interest will go back to your account, to your IRA, or for I mean, not IRA, 401k. So it's better to use your 401k. There's a limit when it comes to loan as well. Okay, so make sure um go through all this information here. Roth IRA withdrawal. There's a lot of information on these different platforms, guys. All right, so always utilize and look at, especially on the IRS website. I would utilize everything, and then yeah, so you can do pretty much that's what you can do. You cannot make a loan in the IRA, but 401k you can. So what you can do typically for 401k, you can invest it in REITs, take out a loan, like I said earlier. All right. And when you have a loan, you can use it for your real estate investment. In some plan, use self-directed brokerage window gives you access to a wide range of investments. Okay. What you cannot do on your 401k, if you're into real estate, you cannot just use this directly to buy and own rental. You have to make the loan, and whatever that loan specify, and installment and interest, it will go back to your account, which is it's good. That's why a lot of wealthy people utilize this tax advantage accounts, because it's better for tax purposes. So it's a lot of information here. So as well, you can use it to fund, if you want to do it yourself, fund mutual funds, index funds, target date funds, bond funds, REITs. Okay, so that's the benefits. It's tax deferred growth, so they're not taxing you. For 401k, you're growing your money. It's tax deferred, so they're not taxing you until you withdraw it. Okay. Possible employer matching, higher contribution limits. That's one thing that's better with 401k. If you have one, you can have both. Maximize all of them, and it's going to help you with taxes too, because especially if you do Roth, and you're taking the money out from your paycheck, so it lowers your tax bracket, or it lowers your taxes, because you're paying your that's why one thing I like about Roth, because it's lowering my income. After you contribute to your Roth, it will minus that Roth, and then whatever the remaining, that's what's going to calculate with the Medicare and Social Security and all these extra taxes. That's minus, that's calculating after that. So you're not paying your taxes on your paycheck after you already set aside money and you contribute to your 401k or your Roth. So it lowers your income a little bit. So the more, of course, that you put money in your 401k or Roth, it will lower your wages, your income for that, you know taxes. So instead of 1,000 taxes that they're calculating to get the tax you for that wages, for that paycheck, now it's going to lower it, let's say 900 or 800, whatever you put in your Roth or 401k. So now they're only going to tax you with the 800 or the 900, whatever you take out. So they're not going to tax you anymore to that 1,000, since you already use the 200 or the 100 to your Roth. That, if that makes sense. Hardship withdrawals, you can do all that. Like I said, there's a website. You can go through all the information, and always, if you have any question, go to your sponsored employer company, ask them all the questions, withdrawal fees. They'll tell you everything. And then you cannot make a loan on IRA. Okay. So IRA, one thing I like about this is it's self-directed IRA. You can do, there is a little bit more leeway when it comes to Roth, the IRA. So, and one thing I like about it is, if when you withdraw, it's tax free. You only get taxed with the capital gain. Okay. No required minimum distribution during the owner's tax-free retirement income. Contributions are not tax deductible. Self-directed IRA. What I like about the self-directed IRA, if you have one, you can invest in real estate, private loans, private businesses, precious metals as well, meeting IRS requirements. So that's another thing what I like about the IRA, because it has a little bit more, flexibility when it comes to what do I do with this money, and to keep growing and to keep investing in other areas. And you can definitely, that's why a lot of wealthy people like the both of these accounts, because they have more, you know leeway, and they have more flexibility when it comes to using the money outside of that account. Okay. First IRA, you can even use it for a first time home buyer up to 10,000 lifetime. Okay, that you can withdraw. If not, if you don't have it, go to your 401k and make a loan. But most of the time, I think they only do like 50% of your entire 401k. I've done it before twice, so depends. Just ask them; they will tell you what would the qualification of your loan. So whatnot, if you don't have this, go to your 401k. And then education expenses, of course. So all of this stuff that you guys can do, always research everything, the fees, the withdrawal fees, all that stuff. And then the time frame, what is your, loan term, if you make a loan, the interest. I like it because it's like whatever interest that you have, it's your own money. It's going back to your account, your retirement account, and all the interest will go back to your account. So that's one thing I like about, making your own bank. So it's better if you can. Of course, they have a limit when it comes to loan, and limitation when it comes to withdrawal, and same thing with the fees and how many times you can do it. So always ask them, go call you their customer service. And yeah, that this is the two um accounts that you can utilize right now. There's a lot of platform now everywhere online, your banks, okay, and then your employer. So utilize them, set it up, and the more early that you start, the better, because it's investing the money for you, right away. And it's just gonna keep growing and growing as long as you leave it there, set it aside, and until you in the future you withdraw it. So I hope you guys enjoyed the video. If you guys have any questions or anything like that, just refer to all of these websites that I'm gonna link on the video. So thank you guys for watching. Get your free guide as well. There's a guide in there in the website. We do a lot of finance here in this channel, so I hope it helps you guys. Thank you guys for watching, and have a good day.